Very good evening to all our traders. This is 18th of September 2020, 9 p.m. in the evening. As always, end of the week Friday evening session for mentorship traders. Let's take a look at the index, sectors, few prospective stocks for next week, and then I'll take care of your doubts and questions. I have the Nifty future daily chart in front of me using the same channels that were drawn on TradingView last week. Top-down approach would take us to that really wide weekly channel. I'm not too sure how useful this channel is going to turn out for us because of the very sheer width of it. I draw these channels primarily based on the behavior of price and the relative strength index. However, it's the daily and the 75-minute charts which are far more interesting. We're talking about 11,600 on the bounce back, where the index probably will try and test the lower border of the channel, and that's exactly how prices have played out. We have the highs of 11,600, 616.4 to be precise on the Nifty future. But what worries me a little bit is today's flash sell-off kind of a situation which we saw in the afternoon. And if I couple that with the fact that the index has respected the anticipated resistances. See, what I have realized over and over again is when we find a market which is in an uptrend, which then goes through a correction of a trend reversal, in this case a clear-cut channel breakdown, then a throwback, which is the next attempt for the market to bounce further back to its new highs. And if it finds a resistance in the anticipated zone, then the follow-through move can be serious in terms of the size of the move as well as the pace of the move, both. This worries me a little bit going forward for the week ahead. And I think some short-term clarity or the short-term trigger will definitely be a break of today's panic low. I will use the word panic because the size of the fall, and considering in the time in which it fell, did create a lot of flash selling, means was dumping. And so the break of today's low, which is the Friday's low, will trigger or may trigger some selling impetus going forward. And I would request traders, especially long bias traders, to be a little careful going forward. This entire hypothesis will prove itself wrong if we find ourselves that the index have found strength and have entered inside the channel. Then all this prospective weakness to a lot of extent dissolves. If I take you further down to the 75-minute time frame, and if I bring your focus to this part of the chart, this falling red channel, if you recall, was discussed last week, wherein we discussed that now the index has tried to take away this channel on the upside. Any short-term correction will find support at the upper border of the channel, and that's exactly what we saw on the 14th this week. And then the follow-through move. This follow-through move has allowed me to draw another fresh channel on the upside, which is this green one. So what does these channels do for us? Number one, a break below this channel, sustained close below this channel, definitely confirms short-term weakness. Those short-term weakness can definitely see the index coming down. And because this upper border of the red channel has given us support close to 11,400, it might do so again, at least try to close to that 11,360, 350 mark. These are good for short-term traders to work in terms of levels. The bearish hypothesis, again in this case from a short-term perspective, will completely go wrong If the index does not fall and close below this, on the other hand, goes up towards the high. So we'll keep these channels in mind. We'll keep these levels in mind, 11,350 as a short-term level, and Friday's low, this last 35-minute bar, this one, was quite severe today afternoon. And so this low will also play an important role to decide upon what should be our directional bias for the market. Looking at it, the way it has behaved this week, and especially today afternoon, and keeping in mind what we have been anticipating, I think we should be a little careful, especially long traders should be a little careful and not be in a haste or hurry to get into aggressive long positions, because if this story plays out, then we can have a bit of selling in our hands. And generally, when they play out this way, again, the size and the pace are little on the higher side. So let's be a little careful and maybe approach next week with a lighter note. Let's not trade aggressively, but observe and wait for the right opportunity. Sectors and stocks which performed. So I'll take you now to stock charts page. This is my dashboard. And like always we do, we'll take up the RRG chart first and figure out which are the sectors did well vis-a-vis the Nifty and where are they placed. If I reduce this to 1 week, 1 week's performance, just to get an idea of percentage change, is primarily CNX Pharma. Now this is where the concept of RRG actually, I will not use the word fails, but does not give a very clear picture. Why? Because if you see the behavior of CNX Pharma, it's been coming down. It's first of all in the weakening quadrant. It's been coming down, that is momentum loss and then relative strength loss. And this is where it was last week. In the weakening quadrant. So ideally, as the theory goes, it should go to lagging, improving, and leading, etc., in the clockwise manner. But at times, from losing momentum, it tends to gain momentum, and that's exactly what has happened with pharma this week. The biggest sectoral gainer, major move coming in the last 2 days, especially today also, is the top in terms of price gains coming from the weakening sector. Rest of the sectors are more or less in the improving and leading, which is a general typical sign. If you see IT, small cap, mid cap, auto, and commodities, these are essentially all of them in the leading quadrant. The tails are all green. The real estate is improving, this one. However, I was anticipating some support to come in from the banks and financial services this week, and it did not come. In fact, on the other hand, it was quite weak for them. It was a short-term, one-day, half-day kind of a move for stocks like SBI and Kotak Bank and HDFC Bank, which just lasted 1 day and then it fizzled off. So that's quite disappointing because this pocket of the market matters a lot, and they are all in the improving quadrant. If I add a little bit of tail to our RRG graphs here, let's take it to around 12 weeks. There you go. If you see the PSU banks, the financial services, the bank Nifty, the private bank, and the real estate, all of them are in the improving quadrant. And that's why when I couple this with the sectoral charts in an uptrend coming down to supports, my view was, okay, this is probably the time for these guys to pick it up from here, but it did not. The fact that it did not proves the point that it's still a relatively weaker sector. Going forward, let's take a look at the sectoral charts, and then going forward, what should be our approach will be far more clearer. Remember, back of our mind, we will keep a cautious approach and not look to buy too aggressively. I have changed my RRG graph to 10 per page, where I have 10 charts per page. I have the 3-river strategy set up on these charts. The first one is the Bank Nifty. This is exactly what I was telling you. If you keep a watch at the last 5 to 8 bars, uptrend, overbought, cools off, comes to the river, oversold territories on my momentum indicator. Just these kind of situations generally are a good fertile ground for a bounce back. That did not come. The index has now slipped into a downtrend, and generally the first sign of downtrend leads to a bounce back and then further fall. So I can still expect and anticipate the bank Nifty and banks to do a little bit if the index tries to find some support. So not going overly bearish right now, maybe a short-term bounce back and then the fall. This is auto, which is back to its previous highs. We had a squeeze, we had a range contraction, which is now breaking out. There's no reason to question this move, so auto holds well, stays in the positive quadrant. Commodity also has gained a little bit. Consumer durables will be a very interesting space to look at. You have a typical symmetrical triangle kind of a contraction. You can see the river, it has become very, very narrow. So this is a breakout candidate, guys. So you should keep a close watch on the stocks which make up this CNX consumer durables. Energy, Reliance, BPCL, ONGC, and oil marketing companies is also range bound. This range is fairly wide, much wider than the range we've seen in consumer durables. This is the range I'm talking about. The river has gone flat. It's quite shallow. So it is ideal to sell on a rise and buy on a dip. That's the behavior of the energy sector. So both ways, cannot have a positive or a negative bias. Financial services behaving like the bank Nifty. If it fails to give us a bounce back anytime soon, Monday or Tuesday, then I feel that the fact that it has reversed to a downtrend will continue further and will start to hit the 2 standard deviation and maybe further down. So it's at supports, it's at levels from where it should bounce back. If it doesn't, then it's going to fall further. Very simple hypothesis and expectations. FMCG, disappointing. Both ITC and Hindustan Unilever, I would suggest stay away from them as of now. When the market needed some support, we got it from the IT and the pharma. The IT, pharma, and FMCG, 3 sectors are the ones which used to move in tandem, and the banks and the financial service and the others on the other side. But we can clearly see over the last month and a half, that FMCG has clearly kind of drifted away from the pack of IT and pharma. IT and pharma continues to rally. Seems like dollar earnings are the stocks or the sectors which are favored in the market right now. But FMCG is definitely drifting away. We'll stay away from it because it doesn't give us any big break after this squeeze. We did find this standard other trend being positive. We had a beautiful breakout. Is it stretched? It is, but uptrends, strong uptrends tends to stay stretched for quite some time. Let it slip below the 2 standard deviation first. If I won't be able to close in, will I be able to? Let me see. Yeah, I think this was too much. If I close in, if you look at this part of the chart, all the bars or all the candles are hitting the 2 standard deviation. That's the sign of a very, very strong uptrend. Let it first drift away from the 2 standard deviation, then we can think of some kind of a contrarian trade. But IT is still very strong. You should look to buy on a dip. Media is primarily Z. Let's not talk about much. It doesn't matter too much. But the river breadth is coming down and it's range bound. Again, a breakout candidate. Metals. Downtrend, expecting a bounce back, because the first sign of a trend reversal generally gives a bounce back. That did not come. Or should I say it did come, but it was not good enough, just like the few odd banks. Now it's still in a downtrend, and this is not a good sign. This is not a good sign because it can drift further down, and it, I think, will drift further down. In short-term indicators are oversold. There are some degrees of divergences, so they can try and give us a bounce back. If it doesn't, then I think both metals, banks, financial services can drag further down. Let's quickly go to the next page of the sectors. Pharma is the one which will load at the top first. There you go, breakout. So this breakout also comes from the fact that we had a range contraction. Now, if I zoom out or zoom in a bit of the pharma chart, this is exactly what I was talking about in terms of financial services and metals. Once the trend goes negative down, it generally gives us a bounce back. This is the kind of bounce back I was expecting in the banks and the metals. It was very, very shallow, as if nothing at all. Then it goes again down, and now we have a typical trend reversal on the upside. Any drop in this trend, any short-term correction in this trend should be looked as a buying opportunity, especially the kind of moves we've seen in stocks like Lupin, Dr. Reddy has been exceptional, life highs. So definitely buying opportunities on dip. Swing long traders should participate. PSU Bank, similar to the behavior of Bank Nifty, is underperforming. Real estate definitely has done much better than the banks, and I think one can look to buy on a dip as well. Finally, the small caps continue to show strength alongside the mid cap index. So to net it out, I would say Nifty is in a precarious situation, and one should be very, very careful and cautious next week. Break of Friday's low can definitely bring in some selling, and if that selling comes, do not be impatient to buy in the fall, because the fall can be a little more steeper than you can participate or anticipate. I'm sorry. If it bounces back within the channel, then it's all right. Then I think we are safe, and we can expect the index to have a slightly bullish bias. But 11,600 is what we were looking at, and we got it, and the market cracked also after that. In terms of sectors, we'll continue to keep a positive bias on the IT, a little bit of real estate, and pharma, definitely with small and mid caps there. Stay away from FMCG. Keep a very, very close watch on the financial services, banking, and metals. We might have a short-term blip up, but if it doesn't, if the market weakens, I think banks and metals, especially banks and financial services, will weaken more. They will outperform the weakness because they did not perform so well when the stock or when the overall markets were doing well. All right, so a note of cautious as I end the weekly analysis of the Nifty, Bank Nifty, and the sectors. We'll now move ahead, move forward, and I'll request